Hey guys, how's it going? It's Andy from MagooInvesting. Happy Friday. In today's video, I thought it'd be fun to go back and take a look at one of my more popular videos, my top 5 stocks for 2020 video that came out at the end of December. And I thought it'd be fun to go through and kind of talk about all 5 of the stocks, talk about how they've performed compared to some similar companies, and talk about how things have changed in the past couple months and how I feel about them now. With how volatile the stock market's been, there's been a lot of movement up and down. And I think it's kind of interesting to compare these stocks that I picked out, which I did not take into account coronavirus, all the news events that are hitting the stock market right now, and kind of go in right now and see how these stocks have performed in such a volatile time. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. The first stock I want to talk about in this video is Twitter, which is actually my favorite stock that I own and is the largest position I have currently. Twitter has been a stock that I've been a fan of for a long time. After they had a bug with their ads, I think it was Q3 of 2019, the stock fell pretty far. It was like 25%. And after that, I just kind of watched it build a support slowly. And as it started building that support, I started taking more and more notice. And I ended up taking a position towards the end of last year. And so since that video, it's actually been one of the better performing stocks out of the 5, being up 3% year to date compared to the S&P 500, which it is a member of, that is down 8%. So being up 3% while the whole market is down, pretty impressive. It's interesting to look at because most of those gains came from their beat on their earnings report, where they had pretty good revenue, but the thing that really stuck out was how much they added on their daily average users. After that earnings report, the stock jumped 15%, but it's kind of funny because I looked at how well the stock had been doing in the past 5 days, and it's given back all 15% just this past week. So it's been very volatile, but it's still able to hold green compared to the market that's down a lot this week. So it's still one of those positions that I feel pretty good about. I don't think there's anything showing in the market right now that could affect Twitter negatively. I think it's a type of company where if anything bad's going to happen, it's going to be self-inflicted. It's not going to get dragged down by news events that are pulling down the whole market. Just stuff like coronavirus isn't going to affect a social media company as much as it would like a retailer. And so comparing Twitter to something similar like Facebook, which is a company that I've gotten a lot of flack for not supporting more and being so bullish on Twitter. Facebook is down around 8% year to date, which is pretty similar to the S&P 500, but a lot of the reason that I like Twitter is I think it has a lot more upside than Facebook. Facebook has been doing decently well. They had beats on their earnings per share and their revenue. However, it wasn't as big of a beat as the market expected. With a company like Facebook, the market has just kind of gotten used to Facebook blowing their expectations out of the water. When they didn't do as well this quarter, the market kind of pulled them down after their earnings report. I still think Facebook is great overall, but I'm very happy to see that my favorite stock, Twitter, is up 3% while the rest of the market is red. Next up, I wanted to talk about Boeing, ticker symbol BA. Boeing was a company that I was bullish on for a couple of reasons. It fit all of my criteria for taking a position. It was a stock that I know pretty well of what they do. It had been hit by bad news, which was the 2 plane crashes and then the grounding of their 737 MAX planes. And then it has been building a support and it was looking really solid. It was a stock that I ended up not taking a position in, and it's down 10% year to date. In the videos that I've made about this stock, I've talked about how I thought there was kind of be a bloodbath when the news came out, whether or not they were going to get their planes off the ground or not. And when the news event came out, it wasn't as aggressive as I was expecting. The news came out that the CEO was expecting a plane to get off the ground in January. That ended up not being the case. And I kind of expected at least a 5% move. But the market kind of appears to have priced in a lot of the pessimism and the news events regarding the 737 MAXes. Boeing is a company that I would be pretty happy to hold right now. I don't think it's a great deal, but based off the fact that they've had these horrible news events, they're outperforming the market right now, I think is pretty interesting. I think it's a company where it is so important to kind of the way of life with flying. I don't see Boeing going away anytime soon. The problem right now is that they are burning through cash because they've spent all this money on this new fleet of planes that are just kind of sitting there waiting. So until they can get those 737 MAXes off the ground, this is not a stock I will be touching. I think it can have a lot of potential, and I think that the downside risk isn't that much. When you compare it to how much the news events have affected the stock in the past, I don't think it has that much further to fall with these news events. I think it can fall with the overall market. If people start traveling less, that'll affect the market for sure. But based off the news events with the 737 MAXes, I don't see that as a hit against the company really anymore. Next up, I want to talk about a winner, which is McDonald's, which is up 1.5% year to date. Being up 1.5% and comparing to the Dow Jones, which it is a member of, which is down 11.5%, I was kind of impressed. I have not been really spending a lot of time looking at McDonald's recently. It originally came up onto my radar because they had a news event come out that their CEO was doing some bad things. He got removed and got replaced. And whenever you have a CEO of a major company like McDonald's get removed, the stock's going to fall. However, when I looked at that news event, I saw it as a fault in character and not a fault in the business. And so when I saw that, I immediately thought this is a great buying opportunity. And it appears like I have been pretty right about that. Out of this list of 5 stocks, I think McDonald's may be my favorite right now, besides Twitter, because I already own that. So I guess out of the 4, McDonald's is probably my favorite. And there's a couple reasons because of that. One, they have a pretty solid dividend of around 2.3%. This is nothing to buy just because of the dividend, but the fact that it's green on the year, it has a solid dividend that they've been increasing for the past 43 years, shows that it's not going to go away anytime soon, and increasing cash flow in these volatile times is always a great idea. Number 2, it appears like McDonald's has kind of gotten away unscathed when it comes to the coronavirus news. When I first saw the news that it was spreading from China, I kind of expected a company like McDonald's to get hit that has a very large international presence. But that doesn't really seem to be the case. I did a lot of research looking for news events linking coronavirus and McDonald's doing well, and I have not been able to see much of that at all. Number 3, and I think maybe the most important thing, is looking at McDonald's beta. Beta is a statistical way to look at how volatile a company is compared to the overall market. And so it's based out of 1. So a company that has a beta of 1 goes up 1% when the stock market goes up 1%. And so when you have very volatile stocks, you'll see a high beta, meaning when the stock market goes up 1, you'll expect the company to do a lot more or worse than the overall market. And so McDonald's currently has a beta of 0.41, which is really low. And at a time like this that it's super volatile, I will happily take a position that's relatively safe that is paying out a constant dividend. Putting the 3 of those factors together makes it my favorite position out of the 4, because I'm excluding Twitter. But I think McDonald's has a lot of great upside, and it's a company that if I took a position now, I'd probably be holding for at least a decade. Next up, I want to talk about Macys, ticker symbol M. Macys is a company that I just talked about in the last video, talking about where I finally sold my position at a loss. Macys is a company that when I originally made that video, I left it towards last because I knew how risky of a position it was. Macys is a company that's been hurt a lot recently. All of the retail and department stores have had a really tough time. And I had seen a support being built at $14.50, and after it started building that, I ended up taking a position. And I was very strict with how I was going to play this position. If it broke below that level, I was going to sell. It recently broke below that with news from the entire market falling and their earnings report going poorly. The stock fell, and so I'm no longer a part of it. Macys is a company that I think will recover in the future, but there's a lot of negatives going against it right now. The potential of the overall economy slowing down in the US and in the world doesn't go well for a struggling company. In addition, the stock has just been pulled down as a result of the entire market and their missing of the earnings report. They had very solid news for their earnings per share and their revenue. However, there was some slowing down of their outlook for the next year, and that pushed the stock down. I think Macys is a company that will recover, but just right now there are too many factors that are pushing the stock down, and it made me be okay with taking a loss at 15% because I think it's going to continue to go down further. It's a company that I hope to own in the future, but right now that kind of looks like my miss from that first video. Last but not least, I want to talk about Activision Blizzard, ticker symbol ATVI. This is a company that I finally took a position in. When I first covered it on this channel, it was something where I talked about if it broke through a certain level, I would take a position. And I got a lot of comments asking how long until I ended up taking a position. And it is a member of my portfolio right now, and I'm very happy. It's currently sitting down 1.8% year to date. It's pretty good compared to the overall market where the Dow Jones is down 11% and the S&P is down 8%. So the fact that they're doing better than the market is kind of surprising. Activision was a company that I was very bullish on for the fact that I think the potential with esports is massive. Activision is known for titles like Call of Duty, World of Warcraft, Hearthstone, and stuff like that. And most of their revenue comes from those video games. So as a result of esports, I can see them being able to branch out a lot more and bring in more revenue from these games that are already selling really well. Recent news events with coronavirus, stopping some of their Overwatch League stuff in China and Korea has me a little bit worried. But the fact that it's not that large of a percentage of their overall revenue sources makes me feel like they're going to get away from it pretty unscathed. I think the esports is a great potential for the company. That's probably the main reason why I love this company overall. In addition to the next-gen consoles that'll be coming out at the end of this year, I'm very interested to see if they have anything in the works that can take advantage of this new hardware. And if so, it will be a great push for their revenue sources overall. Recently, the company signed a streaming rights deal with YouTube, making it so that they're going to exclusively be streaming on that platform. As we all know, Google owns YouTube, and they're the largest streaming service out there. And the fact that they're able to monetize it so well off of YouTube, I think is a great thing for not only Activision, but just esports as a whole. And so I'm really excited to see how that does. Overall, I picked some pretty good stocks, and I picked a big dud in Macys. And overall, I think I did a pretty decent job. In that 5 stocks for 2020 video, I talked about how if I was going to be taking a position in any of these stocks, Macys was going to be the one that I took the smallest position in. And as a result, it looks pretty good in retrospect. The fact that it's down 24% since I made that video kind of goes to the fact that a lot of the problems that I saw are still apparent. And with the market pulling it down, that did not help at all. However, some of the stocks that are still doing pretty well, Twitter and McDonald's, I was kind of surprised. Twitter, the fact that they were able to beat their expectations on their earnings, fantastic. But McDonald's was the one that really surprised me, being positive as the whole market is getting pulled down. With how international their business is, I kind of expected them to get hit, so going back and looking and seeing the fact that they're green is very impressive. So overall, if I was going to have to rank my top 5 stocks from that video, I put them in this order, with Twitter being the first, I would put McDonald's as second, Activision as third, Boeing as fourth, and then at the bottom will be Macys. I think Macys will have a place in my portfolio in the future, but just right now there are too many factors pulling it down, and I do not want to be a part of it anymore. So let me know what you think about these 5 stocks. What do you think about the market overall? And let me know if you're just as surprised at the fact that McDonald's and Twitter are still green overall. Let me know what companies and ideas you'd like me to go over in a future episode. Thanks for watching. I'll see you in the next video.